All right. So thanks to the Asian Bankers Association for inviting me again this year to be part of the Policy Advocacy Committee meeting. The intention of my paper is to really highlight some key factors in the global financial services space that are impacting the AML, that is the anti-money laundering and countering terrorist financing functions in the banking industry. So I have 11 slides, and I will take approximately a minute to 1.5 minutes per slide. So I should be done in about 10 or 12 minutes, hopefully. The rise of digital payments and the associated entry of a variety of new players are now challenging what used to be the turf of traditional banks and finance companies. The regulatory environment in new payment systems, including virtual assets, is continuously evolving, and financial services institutions have to rapidly adapt to the regulatory changes and expectations. At the same time, due to the ease of doing transactions globally, fraud, cybercrime, and other organized criminal activity is at an all-time high and is hitting the bottom lines of all financial services companies. There is pressure from consumers, investors, and regulators alike, be it for service levels or for social and environmental aspects. And it is amongst these pressures that the AML compliance function needs to be run, managed, and improved. And we will discuss some of the key trends within these issues and the remediation tools available for the banking sector. So the first and perhaps the most important factor is the boom in digital payments, and with it comes real-time transactions and non-face-to-face relationships with customers. There are advantages as well as disadvantages to it. Advantages because non-face-to-face customer identification has the potential to become simpler and more streamlined. Verification of documents can become simpler due to digitalization of national identity documents and databases becoming available for government issued credentials. But there are also disadvantages. The non-face-to-face mode of communication has a huge potential for misuse, whether it is through impersonation or through the use of deep fakes or account takeovers. But having said that, the reliance on technology for KYC and due diligence going forward will be very large, and AML compliance functions will have to invest in new and innovative RegTech solutions going forward. Now, a variety of new players have actually entered the financial services ecosystem, whether they are mobile wallets, remittance companies, payment companies, virtual asset service providers, or fintechs. And the payments chain has expanded considerably, and there are now new challenges such as data sharing across various types of companies, the lack of visibility into the entire chain of transactions for any one player. Across the region, we are noticing that regulators too are having an open dialogue with fintech and payment companies to ensure that the message of compliance reaches them quickly and effectively. But it is the responsibility of the new entrants to provide the comfort to regulators that they are indeed taking their compliance obligations seriously and implementing a strong AML program in their organizations. So organized criminals are becoming increasingly global, and they run coordinated fraud and scam operations across countries, which is widely reported in the media. And we also have so many programs on channels like Netflix about it. Especially since the pandemic, there has been a lot of focus on the use of money mules by criminals and their role in money laundering. In our very recent survey on this topic, the evolving tactics of money mules was the topmost challenges identified by compliance officers across the region. So regulatory hurdles also play a part in delays in stopping transactions or freezing accounts associated with money mules. And there are many countries where initiatives are being introduced for real-time collaboration in identifying and preventing transactions associated with fraud and cybercrime, where money mules are most often utilized. But it is not enough for financial institutions to monitor transactions at the back end. There is also a pressing need to reach out and create awareness and education amongst customers, especially the vulnerable populations such as senior citizens. And customers also have now got into the habit of benchmarking services from financial institutions and banks with the likes of Google and Apple and Amazon. Naturally, they expect the same service levels from financial institutions, and this often puts pressure on compliance teams as a conflict with compliance can add to the turnaround time and interfere with user experience. But the institution cannot afford to compromise on its compliance obligations and risk a monetary penalty or risk reputation damage. And this is where compliance has to work very closely with the leadership, with the business, and the technology teams to ensure an optimal balance between user experience and the regulatory obligations. There has been some talk on ESG in the presentation before mine, but as the spotlight intensifies on ESG and sustainability goals, these can be aligned to financial crime compliance goals for mutual benefits. However, there is a significant implementation risk, as explained recently by a report from the Dubai Financial Services Authority on a concept called greenwashing, which was also mentioned in the earlier presentation, which basically means claims made by an organization to misrepresent the sustainability features, action, or impact of its activities, practices, or products, which varies in scope and severity, ranging from confusing or inappropriate use of sustainability-led terminology to deceptive marketing practices and outright fraud. But these are very early days, and the intersection of ESG and compliance is an emerging area and one to watch out for. The last factor that I wanted to highlight is the increasing collaboration that we are seeing between regulators and supervisors, not just in the same country, but also across regions and even globally. Public-private collaboration has been highlighted by the FATF as one of the key goals in addition to asset recovery. And now this is also being extended to a concept called private-private partnerships within some countries where regulated entities or covered persons across sectors are coming together to discuss, strategize, and implement risk mitigation strategies that will benefit the entire ecosystem. So how can organizations and banks ensure preparedness to deal with these rapidly evolving factors and yet adapt and grow? I think the first is culture, right? The first and foremost important thing is to build the right culture of compliance and send out the message that compliance is the shared responsibility of every employee in the organization. It is about self-discipline, which needs to be imbibed into every employee. This change cannot come overnight and needs years and years of work, both by the top management as well as the compliance teams. But in the long run, it will ensure that the institution can stay compliant in the face of any threat or challenge. The second one is the risk-based approach. We have to be as diligent and comprehensive as possible about applying the risk-based approach, which is the cornerstone of every money laundering prevention program. And if this exercise is undertaken seriously and not merely as a checkbox approach, it will ensure compliance that is based on carefully evaluated risks and curated controls. And the third and the last one, of course, is training. One of the most important pillars to ensure preparedness, and especially ongoing and role-based training that not only upskills teams, but also builds the confidence in them to take on their compliance responsibilities. It is important for institutions and banks to build compliance career paths and build the next rung of compliance leaders within the organization. So these are the points that I wanted to put forth to the policy advocacy team and to all of you attending the ABA summit. That's it for me, Chrissy. Open for any questions if there are.